Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and joining my colleague Nandita, Khemka. Well, Nandita, so to speak, it was a fairly wobbly trade for another day. And while we did start in the green, we quickly turned into the red, and the volatility was visible given it was also the Nifty weekly expiry day. But if you look at from the levels front, Sensex closed with about 170 points loss, and Nifty continues to remain below that 25,450 odd levels. And amongst sectors, if you look at Nifty Media Index, that was a top performer, followed by some gains which was exhibited in the auto as well as the pharma pack. However, on the contrary, metals slipped into the red, and the Realty Index that continued to be in the loss for the 6th consecutive day now. But Nandita, fairly mixed global cues that we started off with. We did see the US-Vietnam trade deal which was done, and market is awaiting for India's agreement to get to any further enthusiasm going ahead too.
That's true, Lovisha. It was a pretty steady day. It was turning out to be a pretty steady day, as you mentioned, because we did start in the green. But the climb down really started from 1:45 p.m. or so, because we saw the Nifty come off 180 points from the day's high. In fact, that 25,400 level got tested once again, although we did manage to just about end above that level. But we just about managed to defend that level. And even the broad end of the markets, they came off, but they did manage to end the day in the green. The breadth was, even Stevens. So 1:1, although it was skewed in favor of the laggards, but nothing really to worry about when it comes to the breadth. Of course, you mentioned expiry day volatility really kicking in, and with the names like Reliance Industries, Bharti Airtel, all of these stocks, the heavyweights, so to say, came off almost 1% from the day's high. So these were some of the names that were dragging the market lower. But of course, it was a day when individual names saw good traction, and we'll come to that in just a bit. But of course, within 2 days, we are expecting a deal with the US in terms of tariffs. That's the next cue to watch out for. But in terms of levels on the index, 25,340 to 25,300 is the 10-day exponential moving average zone. This is a crucial support for the index. As long as this holds, we are pretty much okay, because the bout of volatility that we are seeing is largely in anticipation of the trade deal, and of course today, of course, it was largely expiry led. But yes, these are the levels to watch out for on the downside. But if 25,300 breaks, 25,180 becomes a crucial level to watch out for on the Nifty. So yes, disappointing day, so to say. It was turning out to be pretty okay, but didn't really manage to hold on to those gains.
That's right. We're just waiting for the US-India trade deal, and we'll watch out if that actually provides a kicker to the markets going ahead. But yes, from the large caps front on the Nifty 50, Apollo Hospitals did well with about 1.6% gains. We did see earlier in this week about the restructuring and spin-off of the pharma and the digital health businesses, and so far this week also the stock has been up by about 3% or so. Other than that, we can see Dr. Reddy's Lab with about 1.6%, which is their 1.5% gains coming in. It has snapped its about a 6-day losing streak, and of course today the stock is doing quite well. Moto Corp also did well with about 1.5% gains. ONGC, Maruti Suzuki were also some of the top gainers on the Nifty 50. However, on the way down, if you look at from the large caps front, SBI Life, that stood out to be the top leg out for the day, down for the 2nd consecutive day with about 2.5% loss. Other than that, we can see Kotak Mahindra Bank, which was also down by about 2%. We did see that Macquarie's downgrade to neutral on the counter, and they have cited some margin pressure which will be going ahead in the later fiscal of the year. So that is why we can see some pressure which is playing out on the private lender. Bajaj Twins, again with a loss of about 1% or so, they also did not do well, and JSW Steel and Grasim were some of the key laggards. But small caps and mid caps, that outperformed the markets today. If you look at from the mid caps front, that eked out marginal gains, very slim gains, but did end flat in the green, and small caps with about 0.2% gains that came in. Nandita, what are we gathering from the broader end of the markets?
Quite a few banking names which you will be touching upon. They came out with their first quarter update. Some of the reactions stood out, the likes of PNB. That was down, I think, some 3-4% today. Of course, loan growth, slowdown concerns there. That was weighing down on the stock. But stocks like Indian Bank, CSB Bank, these also came out. but kind of flattened out towards the end of the session. They were trading with good gains, but gave up some of them. M&M Financial deserves mention because even that came out with its update for the first quarter. The stock was a high flyer, gained somewhere around 4% or thereabouts in reaction to that. But on the Nifty 500, you had Nykaa, that was the top laggard. There was a block deal in the count of 3% stake. Sources indicate that early investors HP Singh Banga and the family may have sold stake or sold their 2.1% stake via the block deal. Remember, HP Singh had somewhere around 4.9% stake in the counter prior to this deal, but if he's sold his stake, then of course it comes down by 2.1%. Aside of that, you had Raymond, Reliance Power, Indigo, Endurance. These are some of the laggards, but there were quite a few high flyers as well. DCM Shriram, that stock was up somewhere around 11 to 12%. That's the kind of traction we saw some of the stocks on a day when markets gave up most of their gains. Motilal Oswal, AUM has topped 1.5 lakh crore rupees. The stock was a high fly, 8% gain there. Aster DM, Autumn Investment, Bosch, these were some of the other movers, Lovisha.
All right. Yeah, that came in from the broader end of the markets. Now let's quickly break down some of the stocks that did grab limelight in today's trading session. And as usual, we have some quarterly business updates which has been trickling in from the past 2-3 days. We have the Q1 earnings season which will be beginning from the next week onwards. And today we got some good interesting bank updates from the banking sector. Mixed trends were observed. For instance, if we look at PNB's Q1 numbers, that presented a weak set of numbers that came in from the business update, because when we look at the loan book growth, that came in at about 10% year on year and 1.3% on a sequential basis. Now sequentially it was a weak comparison compared to what the street was estimating of about 2% from a quarter on quarter basis. On the other hand, if we see from the deposits front, PNB saw a good growth of about 12% or so. However, if we look at the CD ratio, that basically shrunk to about 71% because they saw a slower loan growth. So a slower loan growth could mean that it could impact the margins for the lender going ahead. We had two brokerage reactions also that came out on the counter. Citi and Morgan Stanley, they were quite conservative on the counter because Citi shared a sell call and Morgan Stanley, that was underweight on the counter. Citi analysts even gave a lower target price for PNB than today's day's low price, which was about your 101 rupees per share, which implies that the stock could fall another 9% from here on. Coming to the second stock in focus, that was your Indian Bank. That fared better in comparison because the loan growth stood at about 11% year on year, which was well supported by its RAM portfolio. RAM basically is your retail agri and MSME portfolio that well supported the Indian Bank's loan book portfolio. On the other hand, if you look at the deposits, that grew by about 9%, and this figure was in line with what the management had spelled out in its FY26 guidance as well. Now that came in for Indian Bank. Now let's shift focus to CSB Bank. They also came up with good set of numbers for the first quarter because they saw a loan growth of more than 32%, which was well supported by the lender's gold loan portfolio. So gold loans grew by 36% year on year, and even deposits saw a healthy growth of about 20% plus. So, Nandita, we saw mixed trends from the banking sector. While it was positive for Indian Bank and CSB Bank, but it was negative for PNB due to slower growth in advances, and we'll be watching out for more of these developments which will be coming in.
Sure, but some of these mid-cap banks or smaller banks have been picking up momentum and have been faring better compared to their larger peers. But let's shift focus to one name from the consumption space, DMart, that also came out with its first quarter updates. The stock was down 3.5 to 4% at one point in time, but did well to recover some of the lost ground. It did end lower in trade, but well off session lows. In fact, it was lower by somewhere around just 1.5% or thereabouts. Now, in terms of the first quarter update, the standalone revenues grew somewhere around 16.2% on a year-on-year basis. They were slightly lower than expectations. Expectations were above 17%. And in terms of store additions, they added 9 new stores in the first quarter vis-a-vis 6 stores that were added in the same quarter last year. But on a quarter-on-quarter basis, this number is meager given the fact that in the fourth quarter they had added as many as 28 stores. But total store count for the company as of June quarter stands at 424. Now looking at the numbers, in fact the company has been facing margin pressure for quite some time, in a couple of quarters, so to say, and it has been coming off a couple of weak quarters. Of course, in the last quarter, they had cited margin pressure owing to three key factors. One was increased competitive intensity in the FMCG space, a sharp rise in wages at entry-level jobs, and of course, investments in improving their service efficiency as well as store expansion. Last quarter, of course, because they added 28 new stores. But in terms of what brokerages have to say, well, they are pretty mixed on the growth prospects of the company and on the stock as well. If you look at Morgan Stanley, they've retained their underweight call. The target price is at 3,260 rupees per share, which is indicating a 25% downside if you compare it to yesterday's closing price. Now it has flagged off slower growth, EBITDA margin. In fact, the company has, Morgan Stanley in fact says that EBITDA margin is seen at 7.8% vis-a-vis 8.7% on a year-on-year basis. Now, the store additions that DMart has done, also includes the one that it has opened in Agra, in UP. That was the only store that they had opened after their store in Ghaziabad. So, even that point of time, Morgan Stanley had retained its underweight call on the stock, and they had the same target price of 3,260 rupees. Now, Macquarie, on the other hand, even this brokerage has a underperform call on the stock. Target price is at lower than Morgan Stanley's target price at 3,000, which indicates a 32% downside. Now they have also pointed out that Q1 revenue growth has been a marginal miss. Store additions although have been healthy according to Macquarie. In fact, they are also banking on the fact that since Q1 sees stronger gross margin owing to the product mix that DMart has, they are expecting Q1 margins to be slightly better, and they are expecting a quarter-on-quarter uptick in gross margins as well as EBITDA margins. CLSA is one brokerage that has a bullish outlook on the stock. It has an outperform rating on the stock, and the target price is indicating a 26% upside from current levels at 5,549 rupees. They have also mentioned that their standalone revenue is 2% below what CLSA was expecting, but they are bullish on the pace of store expansion. In fact, if you look at Motilal Oswal, even they have a buy call, and they've mentioned that store additions here on will be a key monitorable for the company. They are factoring in 60 net store additions in FY26 vis-a-vis 50 in FY25. Of course, DMart is also looking to scale up DMart Ready. So that's another monitorable when it comes to the stock going forward. The stock, if you look at it, on a long-term basis, of course, it has been an underperformer. But on a YTD basis, the stock has gained 20%, it has had a fairly volatile-ish kind of a year. But from March lows, the stock has done well to recover 27%. But still, of course, a long ride to its 52-week highs.
That's right. DMart coming up with the ready option. Of course, investors have been left wondering whether to stay on with the rapid rise of quick commerce or to stay grounded with the retail options like, for instance, your DMart or DMart or even VMart for that matter. But we'll watch out for this stock going ahead as well. But let's move on to the next stock in focus, that is your Tata Power, because that stock witnessed pressure in today's trade, given that the company was ordered to pay about $490 million in damages to Kleros Capital Partners by the Singapore Tribunal. Now, the payment needs to be made along with interest and legal costs, and the case was basically where Tata Power's Russian mining partner Kleros Capital Partners has claimed that the company has breached confidentiality and non-circumvention clauses in their non-disclosure agreement. And this was signed for a proposed coal mining project in Russia as well. Now, Tata Power did say that it is reviewing some of the contents of the award, and it will be evaluating all the available options as well, and they are also looking for a possible legal challenge, a possible legal recourse for this particular conflict as well. It is a developing story, and we could see more details on this front. But yes, the stock did see some intraday recovery, but then again slipped and ended with over 1% losses. Over to you, Nandita. This was coming in from the Tata Power.
Sure, some bit of setback for Tata Power, but the stock did well to recover from the day's low. But let's talk about Blue Star. The stock was, witnessing good traction in today's session. The stock was up 4.5% or thereabouts. MK Global has come out with a report. They have met the management to understand the trends in the AC industry. There are few key takeaways that they shared from their meeting with Blue Star. Now, Blue Star is acknowledging the fact that Q1 would be a washout quarter for the room AC business, with revenue expected to fall as much as 20 to 25% on a year-on-year basis. But this is mainly due to a high base effect, and of course, it's also attributed to unseasonal rains. Remember, across the country, we've seen unseasonal rains, back in May, right? The south saw early showers in April. Even the northwest region saw early rainfall in the month of May. However, this would partially be offset by the momentum that they have seen in central air conditioning. They are expecting 10 to 12% kind of growth in FY26, led by data center projects and commercial refrigeration. So yes, room AC segment will suffer, but it will be partially offset by commercial requirements and demand. Despite a softer start to FY26, Blue Star in fact has retained its room AC growth guidance of 10 to 15% for FY26. They have cited stable structural tailwinds and potential for recovery in the second half. Now that becomes crucial, because even second quarter would be subdued, if there is no pickup in demand, or if there's high inventory and there's weak AC secondary sales. But second half is when recovery is expected to kick in. You have festive demand that would kick in. You also have October heat. A lot of these AC makers are actually banking on October heat as well for a recovery in demand and volumes as well. Now, management has also noted that if the current monsoon conditions persist in the second quarter as well, it will lead to continued weakness in secondary sales, and that may force players to revisit their pricing strategy, in terms of discounts, etc. Strong rebound, of course, is expected the third quarter onwards. Dealer pre-buying ahead of the BEE star rating that would kick in January 2026. That's also expected to push up pre-buying. So if that happens, of course, that would lead to higher volumes. MK in fact has said that trend analysis, according to their trend analysis, they have said that weather-led demand volatility is largely cyclical in nature, and there are no structural issues, so to say, and any kind of dampened demand due to, or demand volatility due to seasonal factors actually is followed by a sharp rebound both in volumes as well as share prices. So this is what MK is also hoping, that second half onwards there will be a fair bit of recovery, both in terms of volumes, demand and stock prices as well, which is why they are fairly constructive, and they have retained their buy rating on the stock, and they've maintained their target prices as well at 1850 rupees on the stock. Blue Star, that was a stock that stood out in today's session.
That's right, Blue Star, that's the stock. But with that, that's all the stocks we have for today. And Nifty has been up, down about nearly 1% or so far this week. We'll watch out for any developments on the US-India trade deal and whether or not it could provide some relief. But yes, tomorrow is the final trading day, and we'll watch out for any reprieve in the markets that could come in. Tonight we'll watch out for the US jobs report data. Early indications does indicate that there could be a weak jobs report after the private payrolls data also showed that a weakness in the jobs market. So we'll watch out if there is any rate cut bets also that gets fueled by the Federal Reserve. But with that,
Lovisha, one issue is that the fact that we saw weakness in the market today, it's largely domestic driven, right? Because we saw Wall Street hitting fresh highs yesterday. Asian markets were okay, barring Nikkei. That's another factor, because Trump has ruled out any kind of trade deal with Japan. So, Nikkei was sulking because of that. But largely, Europe was also trading in the green. US futures were also in the green. So, globally, factors are conducive. I think it's just more to do with caution ahead of the trade deal. And of course, today it was more or less expiry driven. So, let's see. Hopefully, there are some indications as to what the deal would be, if it will come in the next couple of days, that's perhaps something that could drive sentiment. But I think globally things are looking pretty okay at the current juncture.
That's right. Even after the US-Vietnam trade deal has been announced, everyone is watching out for more contours and details from US President Donald Trump at this point of time. So I think our negotiations are something that we also need to watch out going ahead. All right, with that, we've come to an end of this edition of Closing Bell. We'll be back with markets tomorrow at the same time. Stay tuned to moneycontrol.com for all the news updates and market insights.